I'm going to have a couple conversations with you. We're going to talk. Good morning, Ron. It's good to see you. Guys, I'm going to do my best to keep everything as simple as I can possibly keep it. It's fun to look at every option available, but it's easier to look at the best options available. And that's what we're going to do today. We're going to talk about building the most solid foundation you could ever build with this software, understanding that you're going to grow from it. Hey, good morning, Chariot. Good to see you. We all want to see the finish line. Gosh, I love the finish line. There's confetti. Sometimes there's champagne, right? But you got to run the race before you get there, guys. And we're gonna lace up with the best shoes available. First thing we're gonna do is we're gonna check news. Today is Thursday, July 17th. At 8:30 a.m. we had some news. I believe there was a pretty good spike in the market when that news released. We knew about it. We didn't get caught out by it. Let me refresh that. It will show us. And to be honest with you, to be 100% truthful, transparent, I don't care about core retail sales, unemployment claims, or the Philly Fed Manufacturing Index. What I care about, because I'm a little egocentric, a little self-centered, is that anytime I see high impact news on forexfactory.com, I know that the market could spike. I know that it could jump, that it could bump, that it could twist, that it could change direction. And guys, that takes away my advantage. And I choose to never give up my advantages, so I never trade in high impact news. You'll be able to make the same choices should you decide to do so. I've already dropped in the room, guys. If you look in the chat box and look up, I've put 4 documents in the room. There are 2 platforms on which this classroom is taught. It does lean towards NinjaTrader a little more heavy because most of you are here in NinjaTrader. But guys, there is a trading plan for TradingView in there. There is a spreadsheet for TradingView showing you all the different looks for the different trades, ideas on management, and when not to trade. There's also a spreadsheet for NinjaTrader, identifying the advantages that we're going to talk about, and also a plan for NinjaTrader, guys. Whoops, I accidentally downloaded it instead of opening it. So when we look at the markets together, and we're going to do a lot of live reads together, guys. We're going to do like bar by bar stuff. We're really going to break it down. The only time I will ever pull the trigger in a simulated environment for educational purposes is if the rules for this plan are met. This is the KISS plan. This has been dropped in the room. If you're a brand new user, guys, this plan is a way to optimize your chances of success. It's a plan dedicated to teaching you reading your indicators. And it covers what we call a high probability trend trade, which is a trade that typically wins 70 to 80% of the time if you just learn how to follow the rules. And it covers what we call a 50-50 trade, taking advantage of key Fibonacci areas with the potential to break. Both trades have checklists for entry. Both trades have management for that particular trade, guys. This is going to be my roadmap for the day. I'm gonna focus on this plan on NinjaTrader, and then for TradingView, if we are watching TradingView and something happens to set up, it's gonna have to fit the plan, the checklist from this, guys. Having a checklist for entry helps remove emotion. Having a checklist for entry really takes a lot of the stress out of trading, a lot of the opinion out of trading. And what we're going to do today is we're going to answer the question, why will I enter a trade? Well, I'll enter a trade because my rules are met, guys, because you're going to be able to go back and prove that your rules win more than they lose, which means that you're also proving at the very same time that your pattern, your trade, your rules, they do in fact lose. Everything that wins loses at some point, and anything that wins 70 to 80% of the time, guys, it has to lose 20 to 30. So we're going to talk about great entries because great entries create manageable trades. And then we're going to, why will I exit a trade? This is management. Management's where fortunes are made, guys. I will exit a trade either at profit targets or I'll exit a trade because my advantages are no longer present that get me into the trade. So what we're going to do today is we're just going to talk about advantages all day long. We're going to look at charts and we're going to ask ourselves about 3 things. Do I have momentum in the market? And we'll go through and we'll learn how to identify all of these. Is there a clear path? And can I define an entry area? And guys, if you have momentum and a clear path, you have the core for everything that's going to make your trading easy. And then defining an entry, this will change depending on the trade that you take, but it's typically rooted in momentum and having a clear path. And when you have all three, you've got a high probability trade, guys. And this is the best of the best. This is the easiest trade that you'll ever find. When you look at your charts and one of your three advantages goes away, one, you end up in a medium probability scenario, not high probability anymore. And if you're willing to forfeit more than one, 2 out of 3, 3 out of 3, guys, you're low probability. You're rolling dice and hoping for the best. So there's a way to recognize when you have an edge and then developing the patience to wait for that edge. Remember that you control the entry. Knowing what's working for you, what's against you, it helps you make decisions on whether or not you're willing to enter. But it also is going to let you know how aggressively you need to manage the trade. That's the only thing that you're in control of. These guys are going to be in control of everything else. We use a two-chart system to define the rules on NinjaTrader, guys. There is a large chart. It's a big chart. It's a slow chart. On this large chart, you'll be able to define the direction of the market. You'll be able to define the momentum in the market. That's going to be that first advantage from rule number 1. And you're going to be able to define the areas that could be problematic. All of this happens on the first most current bar on that large chart. Once rules 1 and 2 are met, once you have those advantages of momentum and path, we're going to go to a smaller, faster chart, a refinement chart. And guys, this is where you're going to pinpoint entries. This is where the accuracy comes in. This is where risk is reduced, and this is where distance to profit targets grows exponentially. So we're going to do that because there are forces that control the market. Guys, the forces are not you. Just a heads up. There are institutional traders, there are corporations, there are men and women with the power and the influence to create trends, to establish momentum, and these are the exact same people that are reacting at those key areas that you know about before the market ever reaches them. This is the large crowd. This is your big chart. This is how your big chart behaves, and the large crowd typically wins. I want you to think of your small chart. It's just an entry chart. It's a small crowd, and they still have way more money and influence than you ever will. And these guys are just strong enough to create a little ripple in the matrix, guys. They create what's called a pullback. And a pullback is defined as a small movement that is counter to the underlying trend. The large chart tells you which way we're going. The small crowd fights them. We're going to use their fight to define entries, guys. We're going to use their fight, and we're going to pinpoint through rule number 3 for the high probability trend trade exactly where their fight is most likely to be lost. And guys, where it's most likely to be lost is the entry, and they lose typically 70 to 80% of the time, which means that when you learn these 3 simple rules, momentum, path, and entry, you're taking a trade that you can prove through a little historical study wins more than it loses. That's an edge, that's an advantage, and that's what trading is all about. On TradingView, you will still have 2 charts. You will have a 15-minute chart. This is your big slow chart. This is going to help you define turning points in the market. It's going to help you establish momentum. Your 1-minute chart is just an entry chart. It gives you the capacity to take advantage of what the big crowd is doing. And it's the same thing. And when you look at the TradingView plan, let me open it up. It defines the same thing, guys. The 15-minute leads the way. The 1 minute is used for entries. So we're going to go through and we're going to talk a little bit. And we're going to talk about NinjaTrader first, guys. Rule number 1 says that we have to have momentum. But before we do that, I want to give you a little insight. Do I have new people in here? I'm pretty sure that I do. I hope that I do. Guys, if you're new with me, I'm going to give you everything you need to be successful with the software, with the exception of the practice and the repetition. That's on you. We're going to learn trigger line and Fibonacci rules for when it's okay to trade, guys. We're going to go through and we're going to define these 3 advantages so that you can find the best of the best trades. We're going to do it. We're going to watch a live market. We'll enter on simulator if the rules are met. Everybody in the room has the ability to simulate, to practice, to take pictures, to annotate pictures, guys. Post those pictures in the room. This is the first step in becoming a confident trader. So often people are very hesitant to post in the room. Well, what if I'm wrong? Guys, if you're wrong, that's amazing because I'm going to teach you how to fix the wrong. And even more so, if you're right, we're going to high five and celebrate. What a great look. Great job. Great chart read, guys. And I'm telling you, 99% of the world runs on attaboys, and I have never run out of attaboys. What I ask that you do, and I'll drop this in the room for you, every time you post in my room, I want you to go back to those three things: momentum, path, and entry. Momentum, termination conditions, and entry. And I want you to say, this is what I saw. And that's all you're doing. Hey, Mark, this is what I saw. That was the momentum that I saw. This was how I felt about that line that I was trading around. And this is where I entered the market. And you're doing this for two reasons. The first thing is we're going to make sure that you're reading your indicators properly, guys. Chart reading, indicator reading is 95% of your day. Actual trading is about 5% of your day. I want to make sure that you're reading your indicators accurately, that you're getting the best of the best reads. And if you're not, we'll talk about it. We'll fix it. We'll go back to some lessons. What you're also doing, and this is the most important part on annotation, guys, is your annotations are a recipe. When you write on a chart, I have strong triggers, and that gives me a momentum. And I have a clear path because there's no terminations. And I entered at a pullback to an area inside of triggers, which you have literally done as you have written the recipe. And you've put that recipe next to the visual. And guys, you're learning the patterns. You're learning the patterns so that they become easy. That's the second step, guys. Learn those patterns. Use the spreadsheets that I dropped in the room. The NinjaTrader spreadsheet shows you rule number 1 being met, rule number 2 being met, rule number 3 being met. Guys, I did an enormous amount of work to lay this out and make it basic. The green section, 3 of these, there's your best trade. The red section, what it looks like when that advantage goes away. Maybe it puts you into a medium probability trade. Maybe you have both of the red sections and you're like, whoa, I shouldn't be taking a trade. Why on earth would I risk my money? There's about 500 pictures from clients. I've stolen them. I've dropped them in the spreadsheet, use them as a study guide. Ways to define entries in both long and short trades. It breaks it down step by step to make it easy. Ideas on the NASDAQ. Little doom and gloom warning real quick. The NASDAQ moves about 10 times faster than crude oil or S&P. I teach on crude oil and S&P. If you are on NinjaTrader, the NASDAQ, for me, and I'm pretty good at this, is damn near untradeable off the open. When you slow it down with minute charts, it is a little easier on TradingView, I think, but I do have some ideas on the NASDAQ for you. Guys, we're going to talk about management. This first 4 pictures is the management plan and the KISS plan that I've given you. It keeps it very emotionless, very pragmatic, very if-then. You'll begin to see patterns as you recognize advantages, and you'll have a place to put all of your pictures. Finally, there's a trade tracking sheet, guys. The trade tracking sheet shows up on both spreadsheets, and this is a way for you to just track progress. This sheet, I didn't touch it for 3 to 6 months in the beginning because I thought I would just remember everything. Turns out that I didn't, guys. And once I started using the spreadsheet, life got good because every picture in the spreadsheet talked about what I saw, showed me what I did, and I annotated on the charts why I did what I did. So what I was able to do is I was able to come back to this spreadsheet in the morning and look at what I did yesterday and talk about the advantages that I had. But most importantly, and guys, I can't stress this enough, there's a section for feedback in the room. Every time you take a trade, you will get feedback if you post it in the room. Sometimes it's just high fives. Sometimes it's things you could have done better. Sometimes I'll just take your chart and turn it into a lesson for everybody because it's such a great picture to do that with. What you will find are the things that are bringing you success, guys. Every morning you're going to ask yourself, what worked? Well, yesterday I took a great trade, but I left too much risk on the trade, and I got a lesson. And now today I'll manage my risk a little bit better, right? Yesterday I traded into a termination condition and it was an instant loser. So I got a lesson on how to avoid that loser. And today it's going to be a better day because I won't trade into termination conditions. Guys, Dedicate 3 to 5 minutes of your life every morning looking at what you did yesterday. It'll set you up for the day. It will accelerate the learning. And the more you look at these patterns, guys, the easier they become. The more you recognize the words that get you in, strong triggers, no terminations, pull back to an area inside of triggers, what happens is you get to the point to where you just start calling your shots. You literally wait for the market to come to you at the best spot for entry. And that's what we're going to do today. So I'm pretty excited about the day. I've had a lot of coffee, feeling good, slept like an angel last night. So we are going to have a good time today, and we're going to do it, and we're going to start everything with momentum, guys, because momentum leads the way. Momentum is an amazing advantage. It's hard to stop momentum, and it's very easily recognizable, guys. So on NinjaTrader or on TradingView, momentum is defined in an uptrend when the background is green. You have small triggers, 2 solid lines create the small triggers, and you have large triggers, 2 solid lines create the large triggers. It's 4 altogether. That comes in play later. Momentum is defined in an uptrend when your small triggers break above and away from your large triggers. Large triggers must be wide. Guys, there is no momentum in flat triggers. And when the space is there, looks like a shark about to breach, right? Or scissors that are open, the odds are favorable for the market to continue up. Guys, we're trading advantages, and odds favorable momentum is the first advantage. You're going to see it annotated on charts, OFM, all day long. Odds favorable momentum. In a downtrend, small triggers must be below the large triggers. Everything is red. The space is there. The odds are favorable for the market to continue down. Odds favorable momentum pushes a market. Odds favorable momentum is what we look to break key Fibonacci areas. Odds favorable momentum will even cover some of the mistakes that we tend to make as new users. But odds favorable momentum goes away when your small triggers work their way inside of the large triggers. When the scissors are no longer open, you've lost the advantage of momentum. We call this weak triggers, and I want you to associate this phrase with weak triggers. Anything can happen up or down. And when anything can happen up or down, guys, it's not an advantage. It's not an edge. This is where the market tends to reverse from the middle of nowhere. This is where key Fibonacci areas are more likely to hold with that weakness. And guys, momentum is just cyclical throughout the day. This is crude oil. And let's do this. Smalls below the large, guys, that's strong triggers. This is your look. I want you to see right here. The smalls are down, but the large are up. The background is green, but the triggers are red. This is a transition phase, guys. This is where the markets may be caught between areas, caught between a mid-band, caught between fibs, caught between divergences. This is literally the buyers and sellers fighting one another. I don't want to be a part of that fight because I don't have the power to influence it. If I sit still for a little bit, creates momentum again, heads up, goes in the direction of the trend. Weakness is where it turns. It creates momentum again to the downside. Guys, it is cyclical, and momentum is the easiest look ever because all it is a separation between the small and large. All it is a separation between the small and large. So I'm going to ask the classroom, is everybody good with that? That's momentum defined. I don't care if it's a big chart, a little chart, a range chart, a month chart, if it's a crypto chart, a stock chart, guys. Momentum leads the way because momentum is difficult to stop. Don't be afraid to play along. I'm going to put areas back on the chart now because, guys, as wonderful as momentum is, it's only the first rule. Once I have momentum, I have to make sure that I have a clear path. I've got to be positive that there's nothing in the way to stop the market. We use areas on both NinjaTrader as well as TradingView. Guys, these areas are on the chart. You see them before the market ever reaches them. These areas, horizontal lines on a large chart, guys, that's where these guys are making decisions. That's where these folks, these men and women, that's where they're entering, that's where they're exiting, that's where they're fighting. And you know about them before you ever get to them. So you're going to see divergence highs and divergence lows. It's just a pink line from a high, a cyan line from a low. This lets you know that there was a loss of momentum on the push down when it headed back up. And you can see that it becomes a line in the sand, guys, and that magenta line can stop the forward progress of a market. You're going to see yellow one-to-ones. These behave as support if the market is trending down. They can behave as resistance if the market is trending up. You'll see them before you get to them. On NinjaTrader, you're going to see Fibonacci resistance and Fibonacci support, red and blue. Guys, they are exactly as the name describes. This could stop a market that's moving up. This could stop a market that's moving down. You'll see a mid band, and this mid band runs through the middle. It's just a moving average. If price is below it and the rules are met, guys, it could stop the forward progress of the market. It behaves as resistance. When price is above it, you'll see that it turns green. It could behave as support. You don't have to know how these are created. You don't have to know how they come into existence, guys. You don't have to know how to program or do math. All you really need to do is know that they can stop the market. Ali Hader says, so basically when there is a fighting situation between buyers and sellers, it's wise not to make an entry. Am I right? Ali Hader, I think it is. I don't give trading advice ever, but if two pit bulls are fighting over a steak, I'm not going to step in the middle of them hoping to cook dinner, right? You know that you're not in charge, and you can literally define these transition areas by not having momentum. And look at where that fight happened, Ollie. This is the same chart. They are literally dissecting a key Fibonacci area. Decisions are made at these areas. And you know about them, and you can see them, and you can actually choose to just not take a trade and wait for one side to grab an advantage. Does that make sense? I'm so right-brained. I try to keep things as simple as I possibly can. There's my advantage of momentum. This area has the potential to break, guys. There was probably an opportunity to get short there. But let's go through and how do I define a termination condition? Where was I? My goodness. Horizontal lines can stop the market. That's all I want you to really think, guys. I don't even care what the name is. Horizontal lines can stop the market. Fibonacci resistance, divergence highs, yellow one-to-ones, Fibonacci support, divergence lows. The only difference between NinjaTrader and TradingView in regards to the areas is instead of fibs, you can have zones. We haven't had the programmers write Fibonacci into TradingView yet. They're working on it. It's apparently a much more difficult task than I knew. But guys, the zones on the large chart, the same way as areas, can stop the market. So these kind of behave as your Fibonacci alternate, but you can see on this chart, the zone stops the market, the one-to-one stop the market, this one stops it, divergence low stops it. I mean, my goodness, you know about these areas. So what we're going to do is we're going to learn a simple recipe to define them as a termination condition. And I want you to latch on to the idea that the large crowd, the people in control, they're making decisions at these areas. So in order to define a line as a termination condition, guys, first we're going to let price get there. We're going to let the buyers push the market all the way up to Fibonacci resistance. When the market reaches Fibonacci resistance, ladies and gentlemen, all I need you to do is ask yourself, where are my triggers? And if my triggers remain below 1, 2, 3, 4 triggers below resistance, resistance may stop the market. It could create an untradeable bounce. It might reverse the market completely, or it could break. And here's the thing. I never know what it's going to be. I never know if it's going to break or hold, but what I do know is that if all 4 triggers are still below resistance, my advantage is gone. My edge is not present. Rule number 2 is not met, and there's absolutely no trades into that area if I want to have the highest chance of success. The sellers take over. Look at that. The market reverses right from a key area. We call that a strong top. Down it goes. Momentum is strong. It starts to wane, and then it hits Fibonacci support. And everybody in this room says, oh my gosh, 1, 2, 3, 4 triggers above support and yellow one-to-ones. Well, that's a termination condition. I choose not to trade into it, and I avoid the loss that comes soon after. Guys, that is the whole recipe. If price reaches an area, Where are my triggers? If they remain below resistance, above support, the area is not broken. Guys, sit on your hands and just wait for the reaction. There will be a reaction. It will either bounce and fight, it'll break completely, or it'll reverse. I never know what it's going to be, so I choose to do nothing. What's my next picture? My next picture, sorry, total brain fart. Areas break all the time. We're going to count triggers, and that's going to let us know where we're at. So how many triggers are past your area is the answer to everything. And I'm going to blow this up in the beginning right here. Price reaches Fibonacci support. 1, 2, 3, 4 triggers are above, and they're weak. Guys, no triggers through. My assumption is that that area is going to hold, that area is going to absolutely put the kibosh on any short trade that I could ever come up with. When two areas break through, or two trigger lines, 1, 2 triggers, the small triggers get above Fibonacci resistance. Resistance has the potential to break as long as there is momentum present, but 2 triggers is not my best look. It might, I'm really going to have to lean on momentum and a low risk entry. Once 3 triggers get above that area, 2 smalls and a large, the breakout is more likely to happen. I'm still going to lean on momentum in an entry area, but that's when it starts to get good. And then guys, when 4 triggers break through an area, that's when the area is considered broken. So we can use this one. No triggers through. I'm going to sit on my hands and do nothing. I'm just going to assume that that market's going to go down. I'll never know what's going to happen. 2 triggers through, there's a lot of potential there. 3 triggers through, it keeps getting better. And guys, once 4 triggers get above resistance, it becomes support. My path is clear. And guys, with all that momentum, I'm looking for the next key Fibonacci area. Reaches the area, I sit on my hands and do nothing. I wait for the reaction. The reaction is that the market reverses. Does everybody notice how it creates odds favorable momentum after the reversal? Guys, this is a beautiful look. And there is nothing in the way all the way to Fibonacci support. Your easiest trades, the less stress, the highest probability trades you'll ever take are going to be trading away from Fibonacci resistance to the next area, or trading away from resistance to support. Alex, you say you think this is an example of what you're talking about that didn't go well for you breaking the rules. Alex, I love that your F is stuck. All right, so let's just look at the large chart. Price reaches Fibonacci resistance. Ladies and gentlemen, how many trigger lines have gotten through that area of resistance? Alex, how many triggers made it, brother? Does everyone see how the answer is 0? 1, 2, 3, 4 triggers are still below the area of resistance. Rule number 2 says it's less likely to work up, but now let's look down here. 2 triggers have broken through Fibonacci support. 2 triggers have not. Alex, the area's got the potential to break, right? You've got all the momentum. You've got 2 triggers through. Do you see how your small triggers have worked their way inside of the large triggers? That's weakness. That's losing momentum. Only 2 triggers, losing momentum. And your entry is at an area inside of triggers. So Alex, what you did here is you took a shot at a medium probability trade. And let me show you how this works. And this is what I do every trade. And Alex, I apologize because I thought you went long at first, but you did not. So that was my bad, leaning that direction when I shouldn't have been. I'm going to show you guys how this works out. And let's take a picture of Alex's. And guys, this is what you're going to get every time you post in my room. And this chart is relevant to the lesson on terminations. Not even going to look at a range chart. I'm going to put momentum, path, and entry right on top of this chart, guys. Alex has strong triggers. Smalls below the large, larger wide. This is an awesome look. And I'm going to say absolutely the momentum is there. And then because price reached this area, and Alex, it looks like you have a really key zone there too from your supply and demand. Two triggers are through, not my best look for a breakout. Two triggers are not. That means I do not have a clear path. Absolutely no clear path. So I'm going to rely on momentum. I'm going to rely on a low risk entry area. Alex, you took a pullback to an area inside of triggers without a lot of risk. You had an entry area. If we go back to that core concept, what makes the perfect trade? Momentum, path, and entry, not a high probability scenario. Alex, you took a shot at a medium probability trade. Does that make sense? We were missing the clear path. We had momentum, and you had a really nicely defined entry area. And here is the reality of trading, guys. Are you ready? Good trades lose, bad trades win. It happens sometimes. Alex, there's nothing wrong with this trade. It's a beautiful look. It's great execution. The entry makes complete sense. The only challenge is it didn't work. That's it. Does that... I don't know what a medium top is at all. It looks like it's coming straight from one of your key areas, but it went straight to one of your key areas. The easy money is going to be in the middle somewhere between those areas. You took a shot at a break and it just didn't work, man. It's a good looking trade, and if you go back to the very basics, you had 2 out of 3. So how do you define a medium top? I've never heard that term before. That's why I ask. When I talk about a strong top or bottom, let me show you my recipe for it. And then you can tell me what a medium top is. So for you brand new users, I think medium just makes you feel better about taking the trade below, right? If I don't call it weak, well then I've got a better shot. So could we call it a weak top? Why give it any power at all if it's not creating an advantage? Does that make sense? If it's not creating an advantage, why do I want to give it any power? Why do I want to make it feel like it has some strength or is void of weakness? I think language really does pay dividends. Because I know that you have a zone there, Alex, and your zone is a part of your trading plan. But do you see how all of the trigger lines get above Fibonacci resistance? What this tells me is that the buyers were so hell-bent on going up that they absolutely decimated that Fibonacci area. They actually broke it. And when the market reverses not from a key area, these 50-50 trades are less likely to work. Does that make sense? So we use the term strong top or bottom because when the decision's made at a key Fibonacci area, guys, when you recognize an area hit and no triggers through and it reverses the market, guys, that's a strong top. Not only did the buyers get stuck like Chuck right at the key area, the sellers took over with fury and set you up the other direction. The same is true here. Price reaches Fibonacci support. The buyers could do diddly squat. The sellers couldn't do anymore. The buyers take over. They reverse the market. That's a strong top. That's a strong bottom. And what happens is when you have a strong top or bottom, that's actually rule number 1 for these potential to break trades, because when it's weak, they're less likely to break. And when it's weak, there it is again, they're less likely to break. Do you guys see it? When it's weak, it's less likely to break. So this becomes a safeguard for you, and that's actually rule number 1. Let's go back and find a strong top or bottom. There's a strong top, and it smashes right through, right? So the idea of a strong top or bottom is rule number 1 for that medium probability trade, guys, because when decisions are made at key areas, life gets easier going the other direction. Alex, great lesson on that potential to break trade. So guys, let's play a game. We are going to use the most current bar right here. And I want you to play along. And we're just going to play break or hold. Break or hold. That's all we're going to do. So we'll start with a cleared area. Does everybody see how the yellow 1-to-1's held? The yellow 1-to-1's held. And now both small and large triggers are above those 1-to-1s, guys. These 1-to-1s are now support. That's what it looks like when the area breaks. I'm going to go bar by bar a little bit. Market's going up, and it reaches a divergence high line. You just had an aha moment? I love it, Alex. That's what the classroom's for. It's for those aha moments. It's for taking that one little thing that you didn't notice and putting it out in front of you. So guys, price reaches the divergence high. 1, 2, 3, 4 triggers below. Hold or break? What do you think? Give me an H or a B in the room. Is it going to hold? Is it going to break? Start doing this. This is your recipe for avoiding losers, guys. 4 triggers below. All right. Chariot says hold. Victor says hold. Caleb says break. Caleb, break is an opinion. And I love that you put break. The recipe, if 4 triggers are below, the best thing you can do for yourself is say to yourself, there is no way on God's green earth that area is going to break. I don't have any indication. Look at this, 4 triggers below, and look at the bounce. 4 triggers below, and look at the bounce. 4 triggers above, and look at the bounce. Does that make sense? So in the moment, we're saying this area is more likely to hold than break. Does that make sense, Caleb? This is the patience piece, and that's exactly what Ron just said. Wait and see, no trade yet. And Estefania says, hold, but not for long. Estefania can see the future. Well, there's your retracement. They were able to push a little bit through, but ultimately the market did hold. If you tried to take a long trade without momentum, do you guys see how there's no momentum in the move? Anything can happen right by a key area. There's your avoidable loss. And the market comes down, and it bounces up, and we reach the divergence high again. Hold or break? What do you think? Just H or B. How many triggers are above? How many triggers are below? Just hold. It really is that easy. And it tells you that, hey, I'm not in control. I don't know what's going to happen, but my advantage comes from believing that market's going to hold. Now it starts to go up, and it does break. And then it comes down directly into Fibonacci support. Hold or break? And exactly, Ollie Hader said, man, and it was weak triggers too. And Ollie Hader, that is a great example of how you're not in control. Weak triggers directly into an area, that area is more likely to hold. But guess what? They broke this time. So price reaches Fibonacci support, and Caleb or Chariot calls it. Andy calls it. This area is likely to hold. Let's wait for the reaction. Let's see what happens. I don't have to guess, guys. Whoa, look at that. 2 triggers got through, not 3. And there's a big ugly retracement, isn't it? That might have taken me out of a short trade. Now here's your trick question. Price pulls all the way back to resistance, and I've got 1, 2, 3, 4 triggers below resistance. Is this market more likely to spike up or continue down with that momentum? What do you think? Oh, we're caught in 2 areas. It's more likely to go down with 4 triggers below, but it doesn't. And I don't know what time this is. Oh, this is when crude oil is dead. And it does go up. Whoops. So guys, this is kind of the roller coaster ride that you're going to go through. You're going to reach an area and you're going to say, I'm not doing anything. And then it's small triggers can break through and you're going to be like, oh my gosh, It has the potential to break. I'll look for an opportunity if the conditions are right. And if I don't get all 4 triggers through, it's still not broken. But guys, I'm going to tell you right now, and when we go back and look at entries, that might have been an opportunity to take advantage of a market with the potential to break. So let's go define some entries. But look what's happening right now. 2 triggers through, flat triggers, couldn't break support, can't break resistance, guys, and we're caught in a crude oil range. Does that make sense? Your most current bar, there isn't momentum. I don't have a clear path up or down. What do you suppose is the best option? To hope support holds and goes long, to hope resistance holds and goes short, or maybe I'm going to sit on Morgan's hands as instructed and do nothing. Just wait. Guys, something's going to happen. Go eat a muffin, Jen. Eat a muffin. So what do we do when it is perfect? What do we do when we do have momentum, when we do have a clear path? Because guys, when you've got momentum and path, when you've got strong triggers and nothing in the way, life is amazing. You are behind the wheel of the biggest, baddest semi you've ever seen, and it is clear sailing. Let's go define an entry on a smaller, faster chart. Remember, we're going to let the small crowd fight, guys. We're going to let the small crowd say, sorry, big crowd, we want it to go down, and then we're going to pounce on their heads and take that long trade. So the entry rules and the language becomes very important. We're going to buy or sell a pullback, that fight from the small crowd. We're going to do it at an area, at a fib, at a mid-band, at a yellow 1-to-1, because on the large chart, these can be trend stoppers. On the small chart, guys, we want that area to create a bounce in the direction the large chart's already going. But here is the most important part. We want that pullback to be at an area inside of triggers, guys. Triggers are going to define the retracement. So I'm going to open up some entry pictures, guys, and we're going to talk about it, and we're going to break it down bar by bar so you can see exactly what's happening. When the large chart has momentum, when the large chart has a clear path or the potential to break, the large chart, does everybody see it? Let's make sure you guys actually see what we're looking at. Strong triggers, big separation between the small and large. And if you look at it, whoops, that's the wrong indicator. I do that a lot. Get off of there, dagnabbit. It's the hardest indicator to remove. There you go. Can you see how price has not reached trouble yet? It's really close, but it hasn't reached trouble yet. And I have 1, 2, 3 triggers above the area. All the potential to break, all the momentum I could look for, and I haven't touched that next area. Guys, can you give me a Y? If you can see that the large chart says, hey, let's go look for an entry. Or not. Your entries, when the large chart rules are met, this is how you're going to do it, guys. You're going to define your entry point. It begins with a reversal bar on the small chart. This reversal bar is the fight. This is the beginning of the pullback. The reversal bar is not your entry. This lets you know that the fight is on. You can define where that retracement is most likely to go, and it'll be somewhere between the top of the trigger lines and the bottom of the trigger lines. Large and synthetic. Why do we have large and synthetic? I'm so glad you asked. The large and synthetic, where the heck is my Ninja Trader? The large and synthetic, almost there. That's the wrong one. Large and synthetic. I'm going to get there. My goodness gracious. Where on earth is my small chart? There it is. Large and synthetic, guys. So the large triggers, I'm going to put a box around them, are native to the small chart. These large triggers are where the small chart is most likely to pull back to. The synthetic triggers, watch where the box shows up. are the large triggers on the large chart. This is where the large chart is most likely to pull back to. So when we talk about the idea that we will buy or sell a pullback at an area inside of triggers, it's because we want to be in the most likely spot for retracement. Trigger lines, and Victor, here's your lesson today. Trigger lines rarely create a bounce. They're not an area for entry. Trigger lines only define where the retracement is most likely to go. It's the areas inside, guys, and your areas can be fibs, it can be a mid-band, it can be yellow one-to-ones, and they have to be inside of triggers. So I'm using the phrase, I will buy a pullback, that's the first, at an area, and then most importantly, inside of triggers. And I want you guys to embrace this language as you work on your entries. I will buy a pullback at an area inside of triggers, which means that the reversal bar prints and it begins the pullback. I define where the pullback is most likely to go. That's these trigger lines, and it's most likely to bounce from the areas within. And when there's multiple areas, you have multiple options for a bounce. It creates a window. I call it the window of opportunity, guys, because this is where the small crowd is most likely to fail. This is where the market is most likely to bounce and continue with the large chart. Your limit order belongs a tick or two above the highest point of support, because remember that your large chart is screaming up. Your large chart has absolutely nothing in the way to create a bounce, and by waiting for the pullback to the area inside of triggers, getting in at the highest point, you're not tripping over a couple pennies hoping to save a few dollars. Now, any line below the triggers, I call this the wrong side of the triggers, any line on the wrong side of the triggers is not a part of the window. Once you get below these triggers, ladies and gentlemen, the advantage of rule number 3 is no longer in play. You no longer have an area where the market is most likely to continue, and you have no idea if, when, or where that market may continue up. For a short trade, yes, it's futures, we make money both directions, guys. Reversal bar signals the pullback. Define where the pullback is most likely to go with the trigger lines. Understand that the market is most likely to bounce at the area inside. Anything beyond those triggers is the wrong side of the triggers, not at all where you want to be. Your advantage is no longer in play. How can you reduce risk? How can you increase your accuracy? For you brand new users, this is a magical look. It's called favorable large triggers. When you're large and synthetic are one on top of each other, two snakes riding piggyback, guys, you have the least amount of space where the retracement is most likely to go. You start shoehorning fibs, mid-bands, yellow one-to-ones inside of it, you have the least amount of area where the market is most likely to bounce. And if stops go on the wrong side of the triggers where the advantage is gone, this is the least amount of risk you're ever going to have on a trade. You won't always have the least amount of risk, and you'll have to make decisions on whether or not you want to take the trade. Let's go back to, didn't we circle a tail? We did. So I'm going to go back to where that tail is circled, and I'm going to find it on a small chart. And guys, this is how you can study. Momentum, potential to break, and it pulls right back. It blows through the lower, gets to the second, never goes where the market shouldn't go, and sure enough, it continues down. Divergence is a loss of momentum, guys. The divergence is the biggest killer in the potential to break. One divergence makes it lower probability. Two divergences typically kills a potential to break trade. Three divergences on a chart is a termination condition. It's the only small chart termination condition. I will respect this, and it says absolutely no more shorts. And sure enough, the area does not break, and it pushes up higher. Small chart, the refinement chart, telling you that that's less likely to break, guys. And when you look at the KISS plan, in order to have the highest chance of success on these trades, it comes from a strong top, it has the best momentum ever, and no signs of slowdown on a smaller, faster chart. You're going to use these tails on the large chart, guys. This becomes a study tool. Don't worry about what happens next when you go back and study historically. If you see odds favorable momentum, the potential to break, circle the tail. If that circle shows up at an area inside of favorable large triggers, guys, you had a potential medium probability trade. Victor, does that help you a little bit on the question for the synthetics? The synthetics define the retracement zone. The areas define the bounce. Good stuff. Guys, that's your high probability trade. So if you're looking at a large chart currently, there is no momentum, and there's not a clear path either direction. My highest chance of success is going to come from sitting on my hands and doing nothing and letting the large crowd figure out what the heck they want to do. I don't have to guess. All right. This market was screaming up. Whoa, where'd my mouse go? I think I'm losing batteries. Uh-oh. Screaming up, and then we lose the advantage of momentum, and it heads down. And some of you said, well, it had the potential to break, right? Do you guys remember the lesson? If it's not a strong top, if it's not a termination that creates that reversal, this potential is less likely to work. Guys, give me a Y if you can hear me, please. Is it just Gary or is it all of you guys? Awesome. Gary will know to check his sound settings. Guys, if you ever can't hear me, let me know. But Alex, this is your lesson, right? Weak top, less likely to break, and it didn't. And guys, here's the second half of that lesson. They knew about this fib. The buyers didn't get there. The sellers tried to stop them. The buyers said, you know what? We really had the intention of finding this fib. And sure enough, they did. There's no pullbacks for a high probability trend trade in there, guys. This may not be your money if you're only a trend trader. You chili doggers, and you guys are going to see that in this room a lot. There was a trade that was created by a gentleman in here. I use the term gentleman loosely because I don't want to upset him. That is based off of momentum and path. And it is void of an entry area. But he discovered, and I'm going to use this as an example, and hopefully some of you guys caught this. He discovered that when you have the best momentum ever, and when your price bars, not your trigger lines, get away from the decision-making zone, and when your price bars get away from the decision-making zone, there's an opportunity. Whoops. Yes, that is an arrow tool. I see that. Sorry, guys. My mouse is dying. I'm going to have to go hope that I've got something with AA batteries in it. Uh-oh. Give me just a second, guys. Nothing worse than wireless dying on you. I sure hope I have batteries. There we go. We're back, guys. The chili dog trade says, I'll wait for everything to get away from decision-making points, and because it's nothing more than momentum and path, I'll grab 100, 110 bucks, and then just get out and wait for the next trade. And that's exactly what happened. Price reaches resistance, no triggers through, likely to hold, not guaranteed to hold. Hits the next area of resistance, and guys, this is where we're residing right now. We're residing in an area with weakening triggers and absolutely none of the trigger lines through. I'm going to pause and see if there's a reaction. So before I go off, and I'm going to start clicking on some charts, guys, we're going to start looking at what you guys are doing. Does anybody have any questions? Does anybody have a question about momentum? Is there any misconceptions about termination conditions that I can help clear up? What can I do for you? Because the second half of class, guys, and the rest of it is we're going to keep going back and forth to large charts, strong triggers, haven't reached the area. Some of you may have found a momentum trade. The S&P. Strong triggers, but we're trading directly into an area, and you can see The market's already starting to slow down and change direction. Here's your fight on crude oil. Guys, look at it. Directly into the termination. You don't have to trade into it. Shenanigans. Jen. And this market hit that area, and not only did it not break it, now it's reversing from it. Now it's headed the other direction. And you guys may change your thought process on which way you're looking. So we'll go back and forth between the two. Sometimes it's just better to do nothing. 95% of your day is sitting on hands, waiting. But guys, we're going to go back to every chart, and we're going to go back with those core lessons. We're going to talk about momentum. We're going to discuss path. And we're going to look at your entries. So Paul gets us going today. And there's little things. I'm going to tell you guys right now, I do go full-blown proud papa moment when I see you guys growing from lessons. Paul's first chart says, I do have a termination condition that reverses that created a bounce, but I've only got one trigger through this area. Wait. The large triggers haven't rolled up. There's no momentum. Yes, rules make trading easy. Easier. Paul, when I saw this picture this morning, I smiled so big. Because how many long trades have I seen you take into that fib? Right? Great job, dude. Next chart. And look what the fib did. This one's even better. Paul said, hey, I chose not to trade, and I avoided the loser. And he's still sitting at 0 instead of negative 200. Paul, I smiled ear to ear when I saw that picture. And then it comes back to the termination condition. Setup coming? I don't know. Termination condition. It's rolling up. No triggers through. Wait. Save money. Watch. Wait. No coffee yet. Dang. Paul recognizes a range, and he can't find advantages, and he says, I don't have to give any money away here. Paul, outstanding. You guys notice that he took 3 pictures and not one trade. 3 pictures reinforcing his rules. Avoidable loser, avoidable loser, avoidable loser. The patience on this is amazing, guys. And that went from 4:35 a.m. all the way to 5:35 a.m. Paul did an hour doing nothing. And then he got momentum and a clear path and put money in the bank. The best traders you will ever meet are so skilled at doing nothing. The most successful traders you'll ever meet couldn't care less if they don't have an edge. And when the edge presents itself, they pounce. Paul, just virtual high fives and all of the props to you. You took every lesson that we've been working on, you put it into practice, and you called your shots. You said, I'm not going to do it till it's right. And just, I mean, pleased as punch right now. All right, Miss Jen. Termination that reverses the market, that's a strong bottom. She mentions it on the chart because she knows how important it is. Odds favorable momentum. She sees the separation between the small and large, and she says to herself, this is an area with the potential to break. 2 triggers through. Jen says, damn it, divergence. Divergence is one of the biggest killers of these trades. But she makes the choice to enter anyway. She lets it pull back, doesn't just jump in. She forces the market to bounce a little bit and head up. 2 things are going on here. First, she's saying, I at least want to see that they're trying to bounce because it's only medium probability. And she's taking quick profits on the first and getting out break even on the second, minus a tick. And Victor, this is the conversation that we had earlier, and I want you to see this. She entered the trade even with divergence as we had support here, and risk was 2 contracts, 160 bucks. She accepted the risk on a medium probability trade. And then she comes back and she goes, you know what? Mark's going to talk about how the entry could have saved me some money, and I'm just going to shut him up. And Jen, you did it beautifully. Hindsight. With divergence, could have had lower risk entering at the area inside of triggers because their stop would have been even slower or even smaller. And Jen said, wait a minute, all waiting for this market to go up did for me is it increased my risk and it shortened the distance to the good stuff, to the profit potential, to the trouble spot. And Jen, I love this annotation because she took the trade and she didn't just say, hey, look, I made money, I'm done. She asked, how could I do it better? Pretty cool, right? And she identified how to do it better, and she identified why it was better. Guys, that self-reflection is going to push you next level. And Victor, that's what I was talking about on yours. It's easy to say I could have done it better. Go through. How could I have done it better? What would have made it a better trade? Great stuff, Jen. Nice job. And Victor, that's good stuff. Gary, you've been on the phone with Ninja Traders, your funded futures. Nexgen, Jason, and Chris are superior to any other customer service group out there. Thanks for that, Gary. I appreciate that. Jason is one of the best. Chris is one of the best. Guys, we are a company built on customer service, without a doubt. All right. Victor, let's see what you did, brother. Momentum? Absolutely. I'm going to take a picture because we're going to create a lesson. And I'm going to put these bad boys on there for you. Double, triple dittos. I love that. Guys, you're making me blush. I'm not even tech. I'm the worst tech guy ever. So, whoops. All right. Momentum, yes. Whoops. I am all over the place today, guys. Because I wanted this back over here. All right. Separation between the small and large. Momentum is there. Great, great recognition. And then, Victor, the one thing that I want you to recognize is that you didn't have a clear path. What you had was the potential to break. 2 of your triggers were through. 2 of your triggers were not. Does that make sense, Victor? Why do I mention that? I mention that because I know it's not clear yet. I may manage a little more assertively. That's all it is. It doesn't mean that you can't take a trade. It just means that you know what you're up against. And when you know what you're up against, you know how you're going to manage. So your entry area, you took a pullback right at yellow 1-to-1s, right inside of triggers, right? The entry makes sense 100%. And Victor, did you put your stop 5 ticks below those triggers where the market shouldn't go? Is that how you decided your stop placement? Because we talk about that every day. Where the market shouldn't go. It shouldn't make it below these triggers if this is going to be a winner. So what happens in this trade, Victor, is you do take an entry about 15. So you're telling me that you entered at 44 and you had a stop all the way down at 65.15. So Victor, on a medium probability trade, I just want to make sure that I'm doing the math right. You were willing to risk $300 per contract on a trade without a clear path where divergences were printing against the trade. And even with 3 divergences, you chose to hold? Sounds terrifying, but it's your trade. So Victor, when you talk about a medium probability scenario, when you talk about a 50-50 trade, you're not coming from a strong bottom. That creates some challenges. 1 divergence typically makes things pretty bad. 2 divergences makes it a little worse. 3 divergences is actually a termination condition. And for 99% of the world, guys, that's the deal breaker. That's the no trade. You were in before the divergence. You could have exited with it. You chose to hold. And ultimately, it does what the large chart's doing. Guys, one of the things that I'll do with you is I'll tell you, you might have pulled one over on the markets here, Victor. You might have gotten lucky. Not only did you not have a clear path, didn't have a strong bottom and you were fighting a small chart termination, but the market rewarded you with a lot of money. Your brain doesn't see anything but dollar signs. Let's go back to, and guys, I'm doing this just for the sake of argument. Potential to break does not. This was your trade. Look at how low that got. That's scary. Potential to break did not. Potential to break did not. Potential to break did not. Potential did not. So what we're doing is we're not saying the one time, right? And I'm glad you got paid. I'm always glad when you guys get paid. It makes me so happy when luck is on your side. But there's this phrase, short-term victories create long-term failures. And if entering a trade is based on advantages, when you really start to see them go away, it's okay to exit your trade. It's okay to wait for the next trade. Now, Victor, I want to show you something. Right where your blue arrow is. Right where your blue arrow is. Do you see how 3 divergences jacked up your good time and dropped it way lower? As 3 divergences will. Well, your large chart still says up and strong. Look what happens when all of your trigger lines roll. That's where I start looking for my opportunity to come back. I'll take a tiny little hickey here, and then I'll look for an opportunity to re-enter that market once my small chart gets back in line with my large chart. Does that make sense? It's a great chart read. Things really went south on the small chart for you, and I'm glad that you hung in on the large chart. That's hard to do. And those will typically fail more than they win. So I like to point that out for you. And then let me show you on the small chart. You showed a range chart on the same trade. Guys, and this is a lesson for TradingView as well, and minute charts and range charts and these fast triggers. As long as the smalls are below the large, it's going to be hard to go long. As long as you're below those smalls, it's going to be hard to go long. Victor, after your 3 divergences, do you see how they start to break back above? That's where that long chart gets easier. That's where this range chart might have helped you a little bit. It's about the same entry. You just let all the nonsense get done. Good stuff, man. Great lessons on that. You took a less than desirable situation, you trusted the large chart, and you were able to capitalize. All right, let's take a second. Crude oil's still stuck, aren't they? And I'll be darned. Fibonacci resistance with all the triggers below hasn't broken. You guys remember when we just say, let's assume it's going to hold until the triggers tell us different? Let's just assume it's going to hold until the triggers tell us different. All of this nonsense happening on your small chart is inside of 1 bar on the large chart. This is why we let the large chart lead the way. This is why we let the large chart tell us when it's time to look for an entry. That's that refinement process. Pretty cool, right? So we're just in a holding pattern on 2 charts. We're just waiting. We're saying to ourselves, man, let's let it be better. NASDAQ, all that momentum has us north of trouble. It's up or nothing, guys. Strong triggers, prices above the area. It's up or nothing. Same on the S&P. It's strong triggers, getting above trouble. Crude oil. We're below the small triggers, but the large triggers are up. We're directly into a zone. You guys see how you didn't have to trade into that area with all the triggers way up here? And there's a bounce, and now it's hitting, and now it's bouncing again. And it's like this giant red flag, guys. You'll get to the point to where you're like, F that line. I'm not trading into that. That could take my money. Good stuff, guys. All right, Miss Jen, let's see what you did. All right, weak top, strong triggers, no clear path, Only 2 triggers through, right, Jen? Let's do this real quick. No, there are no silly errors because every silly error, every perceived silly error sets you up to be a better trader. I'm going to go to the 50-50 here. And guys, when you look at this KISS plan, it's important that you realize the entry rules for the KISS plan, for that plan that I'm giving you. The entry rules for the potential to break are the best of the best, not the only. The entry rules for the high probability trend trade are the best of the best, not the only. So as we go through and you're talking to yourself about the best of the best, what it does is you can say, okay, maybe it's not the perfect trade and make the decision. So 50-50, one area not broken. Well, we've got 2 areas that we're trying to get the market through here. Do you guys see that? Not only a divergence low, but also a key Fibonacci area. So we've got a little bit of a range that we're trying to break. 2 triggers through, 2 triggers not. So 2 through is iffy. Let it be perfect. It's not from a strong top or bottom. We definitely have odds favorable momentum. Smalls must be outside the large on the 5-1. We don't have that one either. So we're batting 500 here. We've got a 50-50 trade with only 50% of our advantages. And Jen, that's a tough one. The no divergence I know sucked you in. You're like, yes, no divergence. That's awesome. But there was a couple other things going a little bit sideways on that one. Did I miss one on you? I'm so sorry. Yeah, I know. I've done it. All right. Termination that reverses the market. I like it. Trade 1, barely 2 triggers through. Barely, you know what? But it is. And, you know, it's kind of like I barely have an STD, but you still do. 2 triggers through. No divergence, strong triggers, pull back to the area inside of triggers. You're barely pregnant, Jen. And beautiful, beautiful money trade. And then you try to take a chili dog trade, but Jen, you don't have momentum anymore. Do you see that? You still have it on the large chart, but it's gone on the small chart. And then when you lose it, now you have divergence on a 50-50, and you take the entry with weak triggers and divergence, and it almost got you. And I'm glad you were able to pull that one off, and the second divergence gets you out. I like the jump in trade, Jen. I'm a big fan of it. And if you did it right here, it makes sense because you have momentum. Here, it's probably just better to wait. And here's the crazy thing. So you entered here, and it looks like you got stopped out at resistance inside of triggers after you added onto your position. Am I reading that correctly? You added onto your position and then got stopped out instantly on this position. Okay. So no order there, not sure what happened. Okay, I'm not sure. Weird. Weird. It's a great first trade. A little sketchy on the second trade. Nice entry on the third. Good stop placement. Way to get paid. Great recognition. That's a lot of work in a little area. Nice job. It still hasn't broken, guys. Did anybody know about this red line before we got to it? How long's it been there? Since 11:55 last night. That's when that fib showed up. You guys knew about it. You saw it. Some of you chose to trade into it because you didn't get paid here. Some of you said, you know what? I'm just going to relax. If it's really going to break, it'll get above it. If it's really going to break, the market will go above it. Otherwise, it's just not my money. Nice job. Let's see. Alex, we saw yours. Miss Kathy, nice to see you posting in here. High probability trend trade. Momentum? Yes. Path? Yes. Entry, one click below fib. Mid-band outside of triggers. All right. Miss Kathy, are you with me in here? Let's do this. So you've got a lot of arrows. And I just want to point out, here you absolutely have momentum, right? But Miss Kathy, the trade isn't here at all. Your trade is here. Do you see the difference between the two? This momentum was outstanding. And here, would you call this strong or weak triggers with the smalls inside of the large? What do you think? Weak. I agree 100%. So what happened here, and I know exactly what happened here because I've done this 1,002 times, Miss Kathy, is you were so excited about this momentum to find a trade that you didn't recognize that it went away down here. So we're losing momentum. You absolutely have a clear path, right? All of your triggers are below the fibs. Life is good. Nothing in the way to create a bounce. Room to that next target. So we're batting with 50% of the advantages. Still the potential for a medium probability trade. Would you agree? But we have to define our entry area. So I'm going to use the language. And guys, I really do encourage you to have this written out on a piece of paper in front of you. Miss Kathy, the rules say that you will sell a pullback at an area inside of triggers. Okay, so we're going to take a look real quick. There's your triggers. There's your areas. Have you ever heard, Miss Kathy, once you get to the wrong side of these triggers, you don't know if, when, or where the market may continue down? Do you see how there was just no reason to take this trade? You got rid of 2/3 of your advantages. Didn't have anything to push it down. Didn't have anything in a trigger for it to bounce from. And sure enough, very much avoidable loss. Does that make sense? I love going back to these. And Kathy, I have seen this momentum and hyper-focused so much that I couldn't wait to take the trade. And by the time my advantages went away, I was so married to that trade that I just take it anyway. Been there, done that. And guys, that's normal. We're all going to do it. Thank you for posting that, though, because there's a great lesson in there, right? And now, Kathy, tomorrow morning, you're going to wake up and you are going to ask yourself what worked and what didn't work, and you're going to have that example. Great job. Awesome job. Thank you, Ron. Guys, I'm sorry. Clearly, I'm a little drunk today. Not really. The creator of the chili dog. Odds favorable momentum. Nothing in the way. Jump in. Get paid. Guys, that's it. Base hits. Can't stress base hits enough. Can't stress. The whole goal of trading is to get paid. Has anyone ever held a trade and said, man, I hope it keeps going. I hope it keeps going. And it hits all the trouble and you're like, I hope it keeps going. I hope it keeps going. And you add to your position and gosh, I hope it keeps going up. And next thing you know, your account's blown out and you're getting a margin call. Learn how to get paid, guys. Learning how to get paid is one of the most difficult tasks because it means that you have to exit a position that could potentially go up more, right? Ron didn't have any reason to exit on a large chart. Ron has a predetermined. This is a gentleman that makes a career $115 at a time. Base hits pay bills. If you've ever seen Moneyball with Brad Pitt, ladies, you'd love it. He's a good-looking guy. He builds an entire baseball team around the concept that all you have to do is get to first base to find success. And everything else follows, because if 4 people get to first base, guys, it's a home run. So, Ron, I personally am very appreciative of the time and study you put into that trade and how much it's helped a lot of people in the room. Exhibit A, Estefania. We could not have planned this any better. All the momentum, nothing in the way, jump the fudge in, ride that momentum up, and then Estefania, here's your lesson. Are you ready? I sure hope that big red fib doesn't stop the market, right? I sure hope that big red fib that I knew about, that I see, I sure hope it doesn't stop my forward progress. And you gave back, my dear, from 36 all the way down to 24. You gave back $120 worth of your profits. And you knew about that big red line. I'm going to show you guys something astounding real quick. And Estefania, I'm not beating you up. It's just a great lesson. It's just a great lesson. I want you to see something. If I give back $120 a day, and I do it for 252 days a year, the trading days in the year, I'm giving back $30,000 every year by not getting paid at areas, right? Oh, you were on market replay. So you were doing this on replay, just practicing. And yeah, if replay's going too fast, you're going to miss that one. All right, you get a pass on this one, Estefania. So here's what I'm going to believe. I'm going to believe that in a real-world scenario, you would have been paid at the red line because you know that it could stop the market, especially when the small triggers start returning to the large. Is that fair? I'm going to give you that $120 of simulated money because in the real world, you know that could stop the market. Great job, Estefania. I love that you're doing playback. I always say the one thing Nexgen can't give you guys is experience. The one thing that I can't give you is the seat time, is the repetition, is I can't give you the desire to take these pictures, to drill them into your brain, to study these patterns, to make them awesome. But if you are motivated, if you're motivated to do the work, playback is a great way to double the reps in a day. Playback is a great way to trade a week's worth of markets on a Saturday morning with a cup of coffee. Playback is going to double, triple, quadruple your reps. And guys, you are allowed to bring your playback to the room, to talk about it, to look at it, to see it. Because I don't care if it's playback, if it's historical. I don't even care if it's a trade or not, guys. We'll talk about your chart reads. And I'll do everything in my power to make you a better trader, to make you a better chart reader. All right, Steve Diego says, I've got all the momentum in the world. I've got 3 triggers through, and I haven't reached the pink line. Steve, you take the momentum style trade right off the top of the fib, comes down a little bit, and you get paid. Nicely done. It's the Nexgen momentum trade. With the potential to break an area, let the small triggers and price break. Buy that fib. Perfect execution, Steve. Strong bottom, odds favorable, 3 triggers through. There's another one of those Nexgen momentum trades. Doesn't get you, gets you paid. 2 for 2, Steve. Nicely done. Odds favorable momentum. Back of the bar clears, so now we go from the Nexgen momentum trade to the chili dog trade, and it's easy money. And then odds favorable momentum, back of the bar clears. Chili dog trade again. Missed this chili dog, was concentrating on your ES chili dog taken 4 minutes earlier. That goes back to the idea, guys, that if you're watching two markets, you are going to miss trades on one of them. Don't try to make it up. Nicely done. This one was easier, though, wasn't it? For whatever reason, this one was easier. Nicely done, Steve. Great trading. Great trading. Consistent trading. Let's go stop off and take a look at the live market and see what it's up to. All right, S&P. Guys, the termination condition worked. It provided odds favorable momentum. I've got 3 triggers through the area. The KISS plan says with divergence and weak triggers, maybe not my trade. You'll have to make that decision. But look how that termination reverses the market. Alex, that's your strong top. Odds favorable momentum, hard to stop. 3 triggers through, potential to break. John's not the warm fuzzy Novak. If you suck at one market, don't watch 2 of them. Get through the education and learning process first. Guys, some of you will take a 50-50 trade with divergence. Some of you will not. If you're following the KISS plan, I'm not allowed to take this trade in the room because my plan says no divergence on the 5-1. This is the most basic optimization of that trade. Some of you will say because of the strong top. Some of you will say because of the momentum. Some of you will say, I'll take it, but only if I get a reversal bar in the direction of my trade. I'm going to have to stick to the KISS plan, guys, because I have to optimize my chances of success in front of a live audience. And it tells me I'm okay missing this trade because if it goes down, it's going to have momentum and a clear path eventually anyway. Does that make sense, everybody? I'm making a choice based on my rules not met. I don't know what's going to happen next, but I know that more often than not, this is detrimental. And no matter what happens next, my plan's not met. Did crude oil ever break out? Oh my gosh, they tried, didn't they? Did anybody get excited? They're like, yes, here we go, 3 triggers through. And not notice, whoa, what did I do? Whoops. And not notice that price reached a divergence high and 4 triggers were below it. You guys remember before you had Nexgen and you lost money in consolidation? Before you had Nexgen and you got caught in choppy markets? Nexgen users don't ever have to get caught in choppy markets. You have rules to keep you out. Man, that is a pain in the butt though, right? You've been so patient for so long. And I just I hoped that termination condition wouldn't stop the market this time. Your trigger line and all indicators just vanished. Ollie, can you show me a picture? Let me see what it looks like real quick. It might just be a scaling. Do you have an F in the upper right-hand corner? Sometimes the market moves real quick and it goes off screen. So if you have the F, okay, you're reloading again, let me know. And if we need to, we'll get you with tech for sure. Do you guys see how you didn't need to go long there? Love it. And S&P is still trying to decide whether or not it wants to break that area. Thank you for that, John. All right, who's next in pictures? And John, you missed the bar by bar stuff, man. We were killing it. All right, Miss Jen. There we go. Strong bottom, thank you for noticing. Weak top, odds favorable. Late entry. Yeah, you probably had rules met around 14. You're in at 16. But Jen, you had room to make the money you needed to make on the trade. Yeah, it's a beautiful entry. Jump the fudge in. Exits at trouble. Great trade, Jen. These are the easy ones, aren't they? When the market is absolutely railing and there's nothing in the way to stop it, it's crazy how easy it is to find a way to get paid. All right, Andy. Big swing in the market. Yeah, that's true. So let's just go to the trade. Smalls are up. You're on the strong side of the smalls, Andy? It looks like it. Flash cubes. I have not thought about a flash cube in 40 years. Strong side of the triggers, coming from a termination, nothing in the way. And Andy, this is beautiful. You have odds favorable momentum on the small chart. Price breaks the zone, pulls back to the zone, and you enter the market. Andy, this is the perfect momentum trade. Strong side of the triggers, nothing in the way. Strong triggers, break, pull back, giddy up. I mean, my goodness. What a great look, Andy. I'm going to put it in my momentum trades over here because that's going to be a good study tool. Flash bulbs or no flash bulbs. Great shot, dude. Great job. We'll just call it momentum. Do you see how, guys, this is for you TradingView users. I know, right? The initial read is, oh my gosh, my large triggers are up here. Let me find a color that doesn't clash with his charts. But guys, the small triggers are up, and these are big, slow charts, these 15-minute. Andy is above small triggers that are up. That's the strong side, guys. That's where you can look for trades to the upside as long as you're north of those triggers. As long as you're south of these triggers and they're down, the market's more likely to go down. When they roll and go up, he sees it. He's got strong triggers here. He gets above the area and buys the pullback, and Andy, stops are probably minimal as you ride it up. What a great trade, dude. Nicely done. Nicely done. TradingView is different, but guys, it's the same stuff. Do I have momentum? Estefania says, let's see. Odds favorable momentum, room to the profits. Triggers did become weak. There was your first entry. They come back for you. They come back for you again. And Estefania is like, you know what? 3 divergences, trend trades, not my bag. And Estefania, you get in below trouble and take a quick profit. And then you just ride that momentum down and make more money. Nicely done, Estefania. Momentum and path, ladies and gentlemen. I cannot overstate the importance of understanding momentum and path. Whoop, Jen, we saw that one. Maybe it's the flash cubes. Not everybody in the room remembers flash cubes. All right. Does anybody remember 3.5 minutes ago when I said with the potential to break, divergence? Divergence is one of the biggest killers of this trade. And look what happened, guys. I didn't know that was going to happen. What I knew is that my rules weren't met because of this look right here. I chose not to take the trade. I didn't lose any money. I'm waiting for the next best thing. Does that make sense, everybody? That KISS plan is designed to optimize your chances of success. So let's go through the checklist for it. Strong top or bottom is an absolute yes. Odds favorable momentum is an absolute yes. Smalls must be outside of the large. Well, that's a no. No divergence on the 5-1. Guys, there it is, no again. Avoidable losses will ruin an account. They don't have to. Let me go back to Exhibit A. Actually, let me go back to Exhibit A, B, and C. And then follow it up with Exhibit D. Paul, I'm putting you on a pedestal real quick. Don't blush. Rules not met. I choose not to enter the trade. Rules not met. Save me from losing money. Rules not met. I choose not to enter the trade. Rules met. I'm not missing any of this $200. Paul, if you had lost $200 here, right? If you had lost $200 here, you'd still be negative after that great trade. The ability to do nothing pays huge dividends, guys. The ability to sit on your hands and be patient, it keeps you from giving away the money. It wears you out not waiting. It's exhausting trying to predict every turn. It's exhausting trying to be in every move. All right, so let's talk. Price reaches, Fibonacci resistance. Let's count triggers, guys. How many triggers have made it through? Well, my goodness, there's 2 areas of resistance. Absolutely no triggers through. Guys, is that resistance more likely to hold or break? What do you think? Give me your 2 cents on it. It's more likely to hold, right? More likely to hold. But I've got strong triggers up. I've got a green midband. Isn't that an entry? Not if my rules aren't met, guys. Not if my rules aren't met. And this is the siren song that is the small chart. I know I don't have momentum. I know I don't have a clear path, but damn it, that entry looks good. Let me take it, right? Never had a clear path. Let me try and get stopped out. Let me try and get stopped out. Let me try and get stopped out. Doing nothing is awesome. It is. And you will go crashing to the rocks, Paul. It is the siren song. I know your rules aren't met. And guys, it's that darn little what if monster. We all know it, right? But what if it breaks? But what if I win, right? What if breaking my rules produces a winner this time, even though it didn't the last 75 times? What if? I don't want to miss out on that. Hell, I'm just going to jump in. Look at the momentum. That's the chili dog. No, it's not. There's no rules met. Fight that what if monster, guys. All right. Andy. Smalls, strong side, above trouble, out at trouble. I mean, my goodness, Andy. You need a new Snagit? What does that mean? Is your Snagit not working? It looks like it is. Do you guys see it? Strong side of, oh, flash. You can adjust these colors if you want to. Did you know that? Do you want to see how? So go to your trigger line setting, Andy. Oh, yours are fine on TV. Oh, it's your Snagit doing it? The resolution's all weird? That's crazy. Or the exposure. Hold on. Let's see. Magnify, highlighter, line, magic wand, simplify, blur, selection, edit. There's probably a way. Help. Tutorials. Maybe not tutorials. Guys, I'd like to learn, just so you know. I'm a big fan of learning. Worry about momentum, path, and entry. Yes, sir. Yes, sir. Can I reduce exposure on Snagit? Graphics, crashes, enable, convert, TechSmith. There's probably something in there. Probably something in there. Yeah, I know, but you know me, I'm a worrier. The 3 triggers through training update guidance is a valuable addition. Thank you for that, Steve. And as much as I love to take credit for everything John Novak has done, John gave me this picture. Guys, this room was taught, just so most of you will remember, this room was taught that 2 triggers through is a good look on a 50-50 if the conditions are right. John added that little 3 trigger thing through his study and just made the classroom better and made those opportunities stronger for you guys. And that's there's this idea that John Novak, and I love it. I wonder if it's in the glossary of common terms still. All right, so it looks like you violated, Ollie. It looks like you violated. So what I want you to do for me, please, is put a ticket in with Jason. And what he'll do is he'll look at your file and make sure that something is off on yours. Let me get you the link to tech support. And it looks like you violated, which means maybe you changed the time, maybe you changed computers, maybe you try to download it. I don't know what happened, but that goes beyond my grasp on tech support. So if you'll put in, and I dropped the link just below your picture for tech support, put in a ticket with Jason real quick, and he'll get you fixed, and it'll take him just a little bit of time. Watch your messages after you put it in. He'll reach back out to you. But chances are the file violated for some reason, and I don't know where you're at in your demo or anything. But Jason will get you squared away for sure. Jason, he's brilliant. You're gonna love working with him, and over the years you'll have that same idea that everyone else has about him, that he's just outstanding. I'm a big fan. I want to see under the glossary of common terms. No, they changed it. So guys, under the glossary of common terms, if you're an older user, there used to be this phrase, HBNS. HBNS. Happy but never satisfied. There it is. John Novak's state of mind. Always looking for a better way. JN finds these things, and many thanks to him. However, without your coaching, many of us would not be here. I appreciate that, Paul. That's nice of you to say. Small triggers are down. Large triggers are up. Bunch of stuff in the way. Bunch of stuff in the way. Small triggers are up. Large triggers are up. I'm above trouble. Guys, I would bet my bottom dollar John Novak went long right at this HVA line. John Novak, show us your trade. I guarantee it. There is no doubt in my mind. That fits his plan. Strong triggers on 2 charts. He's buying an HVA line, and he is building a freaking career off of that look right now. And it is still going. And this is, I can't get him to shut up in the room. And now that he has a reason to talk, he's not talking. John does have some great companies. I'm happy to be a part of them. And I am happy to be here, guys. I do enjoy teaching. There's our scramble. Resistance held. And now we're right back to no momentum and no clear path and no reason to give money away. And guys, holy shnikes. Thank you, crude oil. You have defined a range that I'd really like to break out of to have an advantage. Thank you, rule number 2. Pretty awesome, right? They'll pick a direction. Ollie Hader, remember when we were talking about momentum, and everybody in the room, and we were talking about things not matching, colors not matching backgrounds, triggers not matching one another, and you can say to yourself, gosh, the people in charge are fighting. The men and women that control the market, it's a rumble. Guys, I don't want to be a part of that rumble. I don't want to hope support breaks. I don't want to hope divergence highs break. I want a clear path. I want momentum, and then I will find a way to capitalize. All right, guys, I'm going to take a break. I'll be back in just a minute. When I come back, we'll just keep talking about what we see. We'll keep talking about what you see. I I'll lean on TradingView a little bit after this and see if we can't get some lessons going there in the last hour. We've done an awful lot on NinjaTrader today, guys, and I know that a lot of you are doing this. Some of you are looking at TradingView. I don't want you to feel left out. And if you have TradingView questions, guys, if you have TradingView charts, do not hesitate to post them in this room. There is no division between which platform I'll talk about. I'll talk about everything. I'll see you in about 5 minutes, guys. Termination condition is holding. Termination held. No strength into a termination. Hold on. You guys know that it's that time, right? My indicators aren't giving me anything. Will the market go up? Guys, we're going to defer to the experts. Most likely. All right. There we go. Magic 8 Ball says most likely. That's about what guessing should feel like to you guys. If the indicators don't say it, there's no reason. Just pause. Pause for the cause. All right, Miss Jen, show me something good. Strong top, odds favorable. She chili dogs, gets in. Oh, Jen, you saw that big blue line, right? And then 50-50 with divergence. And Jen said, F this market. I'm going to do it any... Oh, you went long. Financial suicide trade. So you're watching a 21-3 again. Mid-band held 3 times. So you figured you should go long. All right. Divergence prints. And you go long. So... No, that's okay. Let's reverse engineer it. Let's look at the next picture. The 21. All right. I'm not sure where your trade was. Somewhere over here, right off support. I'm going to see if I can find an example. Whoops, ran out of chart. Pretty good sustained down move. I don't know, I'm trying to see if a 21 mid-band holding 3 times is a reason. Might be. Might be. I know you had your reasons. So let's reverse engineer it. Can we, Jen? Oh, it's ES? No wonder it's not showing. Right on. So Jen, right about here, Jen. Nobody knows what that means. Well, Ollie Hader might know what bollocks is. Most people don't know what it is. We think it's a Nevermind the. It's an old Sex Pistols. All right, so your checklist said no 50-50, likely to lose, right? And Jen, no 50-50, not likely to break, weak triggers, divergence prints. And you say, well, I can't go short, right? Because this is a market that's more likely to push up through this area than it is to continue down. Is that fair, Jen? And you had another one, right? So, and guys, some of you do this so well, and some of you don't. If I can't go short, can I find a way to capitalize on longs? That's all you did, Jen. You got out at the first sign of trouble. You got paid again. You waited for the divergence that killed the 50-50 look. Was it rooted in advantages? I think it was. You said this big honkin' chart. Actually, that's pretty freaking ugly for a long trade. I'm not going to lie. Because here, 63.05, and it pushes considerably lower on all of them. Just reverse engineered a 50-50 trade. That's all it was. It's your trade, Jen. I love the aggressive management. Right now, Ron is flying a pirate flag somewhere. Somewhere Ron's flying a pirate flag. Andy, you tried Microsoft snipping tool and it's the same. It must be your trading view not wanting a bunch of paparazzi. That's got to be it. Got to be it. Who's Roy C? Misspell. I have not seen the sarcastic Magic 9 ball, Andy. I will look at that later. Not sure how often it works. It's a new one. So, Jen, if you're not sure how often it works, how do you find out? You've got to go back. Hey, 8-ball was right. You've got to go back and you've got to find a 50-50 trade with weak triggers or divergence, right? And take the picture. That one didn't have it. Let's see this one right here. Divergence prints. Was there room to make money? That's all it is, Jen. There's 50-50. Divergence prints. That one barely made it. That one did make it. Maybe weak triggers is it. So write a checklist. Go back and test it, right? Ron right now is going, I know it works. It's a pirate trade. Another one of his trades. Based on the idea that that 50-50 is probably not going to work. Let's go the other way. Yeah. Ron used to present that one a lot in the room. Chili Dog. Trade 1. Fib and midband close together. Look for entry in direction of trend. You asked for me to share the trades I want to look for. This is your first choice. So let's ask ourselves. This is one chart. Does it only take one chart to get you in on this one? All right. Miss Linda, we're going to talk through this together. I think okay, so fib and midband close together. So the rules were met here, and here, and here, and here. What's the difference between the one where you took the entry? Because the fib and midband were close together here, and also there, and also there. So how do we decide when fib and midband close together is an advantage? Here they were, weren't they? Fibs, midbands, everything says down. Because here the midband is magenta, but you go long. Here the midband is green, but you don't go short. Here you had strong triggers to the downside. Here you didn't have those strong triggers yet. Does that make sense, Linda? So we're defining repeatability. This one didn't have room. Okay. This one had room. That should be somewhere in your annotations. So let me see. If I were writing a checklist, and I'm doing this, Miss Linda, and this is a lesson for everyone, not just you. If my small triggers are strong, and I have room to the next area, I'll jump in and hope. And that's okay, right? That's not it. How does the fib and midband come into play? That's the part that I don't understand. Because one's a calculation based off of Fibonacci, the other one is just a moving average. Look for entry and direction of trend. And the only reason I'm doing this, Linda, I'm not trying to put you on the spot, and I certainly hope this doesn't frustrate you. This is a 13-2 chart. What does the large chart say about you going long? You're on the good side of everything. It looks like you're coming from a termination condition. The triggers roll. Your large chart's pretty flat. So you've got that immediate momentum, and you've got room, and I love it. I love everything about it. See where the back of the bar clears all of your problems? Right there? Where price gets away from anything that could create a bounce? Takes you away from that decision-making zone. Because look at it here. Creates a bounce, and then once you're north of it, I love everything about this. But I want to make sure that it's repeatable. I want to make sure that you can do the same thing over and over, because that's a beautiful look for more longs. And you took it all the way until the momentum ran out right at a key Fibonacci area. It's a gorgeous trade. How do we make it repeatable? Does that make sense? And I know it feels sometimes like I'm trying to beat up your trades, guys, and I'm really not. Because one of the things annotations do is annotations make it so you can do the same thing every day, because it's bringing success, because you can prove that it wins more than it loses. And fib and midband close together doesn't tell the whole story. That's a tough one for me. Look for entry in the direction of the trend. That's great advice. But how do I define it? Good stuff, Miss Linda. If this holds, I'll wait for the reversal. Look for the entry area on a sell-off after the advantages are present. Just waiting. Great job, Victor. That's that patience picture. That's that patience picture. I don't have what I need. I choose to do nothing. Andy, you shut the whole thing down, reopen, and everything's back to normal. Nice. Weird how that works sometimes. All right, Miss Linda. So now we've got two charts. Now I have a big picture. So all four triggers below resistance on the large chart, small triggers down. Everything about this chart suggests resistance is going to hold, and the small triggers give me a direction to trade. It is mirrored on your entry chart, smalls below the large, and you just get in on the way down, and it's beautiful. All right. So first, what happened there? Here we go. So first, why is it not printing? Large chart has a term. And small triggers roll. Small chart, large triggers roll, small beneath, jump the fudge in, and ride that momentum to trouble. What do you think, Miss Linda? We could probably recreate that over and over, don't you think? That's kind of my goal with annotation, is I want to write a recipe. I want to be able to look at it because I want to go back and test it. So let's just see real quick. Large chart has a termination. Whoops. Large triggers roll on the small chart and give me momentum. I'll jump in clear of trouble and ride that momentum up to the next area. Miss Linda, that's your trade, isn't it? And the midband's right at the area. You're onto something with that. I just didn't understand it. Let's see if it works twice. Here the small triggers are in the wrong spot for it. Let's go look over here. Morgan, have a good one, man. Doesn't break. Large triggers roll. Odds favorable momentum. Get in, clear of trouble. That one didn't go quite as long, right? We didn't know there was going to be a range. But Linda, that feels very repeatable, doesn't it? That feels like something that you have such a great recipe for. Strong bottom, odds favorable, 3 triggers through. If I get a pullback to an area inside of triggers, no divergence, my entry is 2 ticks above that area of support. My stop will go 4 to 5 ticks below those large triggers. You guys see it? First it's a termination, then it reverses the market, gives me odds favorable, 3 triggers through, no divergence. Let's see if we can get a pullback, and I'll enter 2 ticks above the area inside of triggers. Does that sound familiar to anybody? Doesn't guarantee a win. Doesn't guarantee that I'm going to be rich beyond my wildest dreams from this one trade, but what it is a very specific set of rules with a very clearly defined entry that optimizes my chances of success with this look. I've done everything I can do. So if we get this entry, we will manage it like a 50-50 trade. If the market gives me an entry, my stop will go 4 to 5 ticks below the triggers. Doesn't look like it's going to give me an entry. Maybe not my money. But you know what's cool, guys? Is now it's a clear path and odds favorable momentum. I'd love a pullback right to that mid band, right at the bottom of the triggers. That's about the lowest risk look I could ever get. And because it's now a clear path, I don't care if divergence prints. The rules are met. Ollie Hader, who else is new in here? Do you guys see it? First, it's strong triggers. 4 triggers above trouble. Price didn't reach. This is the best look on a large chart I could ever hope for. If I get a reversal bar, I've got a mid band at the very bottom of the line. I'm going to try and get in a tick or 2 above it because I don't want to trip over any pennies. My stop will go below the triggers where the market should not. Andy V, does it make sense? Who else is in here that's new? I love the new people, guys. These patterns start to jump off the page at you if you just use the language. Just use the language. So now we're just hoping. I hope they push back. I hope the small crowd fights. I hope they get a couple ticks above a mid band inside of favorable large triggers, because dag nabbit, that's where the market is most likely to continue. Ollie Hader, you say it looks like this pattern will break and swing down? Oh, but what does your large chart say, Ollie? Do you see the momentum here? See how we haven't hit anything? Let me remind you, and you'll like this, inside of this one bar is all of this nonsense. This is why we let the large chart lead the way. Because when the rules are met, inside of just one bar, we're going to see a pullback, hopefully a bounce and continuation. And this chart's never going to give up the advantages. Let's just let it play out. We'll see. This is my pattern, though. This is a pattern, if I go back and test it, it typically wins 70 to 80% of the time. And I don't know that we've had any high probability trend trades yet, but let's see if we can find an example. Well, they are just killing it over here. But it looks like the S&P is doing the same thing. Momentum, path. My challenge is that my areas are on the wrong side of these triggers over here. I can't define my entry area. So we'll let this one play out. If I get a pullback, I'll enter 2 ticks above the midband inside of triggers. Guys, the bottom of the triggers is 64, which means that my stop will be at about 58. And this is our entry. So Ollie, let's see what happens. I love this stuff. So we'll put a box around where this bar is printing so we can see all of the inside movement inside of this box. All right, we're in. If I get an entry, my stop is 1, 2, 3, 4, 5 ticks below the triggers where the market should not go. So now we're at the mercy of the market. My first target is $100. My second target is $200. The small chart's pointing down. Large chart is still up and strong. Stops where the market shouldn't go if this is going to be one of those winners. So now I'm just in a holding position. If I get a reversal bar, then my new stop is 2 ticks below the reversal bar. If they stop me out, it's a cost of doing business, guys. But this one fits my plan. First, it's momentum. Then it's a clear path. Pull back to the area inside of triggers. Looking to make $100 and $200. Does this make sense, everybody? No guarantee of a winner, but it fits everything that I look for in a trade. This is a trade that I can go back, I can test, and I can prove typically wins 70 to 80% of the time. And it's an entry that's rooted in the advantages of what this large chart is doing. One divergence doesn't scare me. Small triggers down doesn't scare me. Guys, I need this loss of momentum so I can get to my entry area. Remember, this is just a small chart fight, small crowd fight. Big chart says yeehaw. And here's the cool thing, where my stop is below the fib, if price hits this fib and 4 triggers are above it, support is also more likely to hold than break. Small chart will scare the ever-loving crap out of you guys. Look at the large chart advantages. So now we do nothing. I either get stopped out, it's cost of doing business, or I get a reversal bar in the direction of my trend on the small chart, which will put our new stop 2 ticks below this reversal bar. We are going to redefine where the market should not go as soon as we get confirmation on this trade, if we get confirmation on this trade. Any questions about where we're at so far in this one? First, we had momentum. We had nothing in the way. And we defined our entry right where the market was most likely to bounce, which happened to be a mid-band inside of triggers. And oddly enough, it is bouncing directly from an area inside of triggers. It's not stuck, Miss Jen. The buyers and sellers are fighting. Oh, hold on. Oh, I thought you meant like the market was stuck. There we go. Can you guys see it now? Take care, Steve. If we get to this reversal bar marker, guys, we're going to reduce risk. If we don't, we're going to get stopped out. This is the KISS plan. This is the Keep It Simple Sunshine plan. This is the highest probability trend trade you can ever take. It comes from a termination. It reversed the market. It created momentum. It gave me a clear path. I haven't reached trouble. I mean, my goodness. I'm 2 ticks away from a reversal bar. If we get that 2 ticks, guys, Our new stop will be 65.61. We'll have $50 of risk per contract on this trade. Until that happens, my original stop stays where it's at. Ollie, you're still missing a lot of indicators. Do me a favor, right click and reload your historical data. Guys, there is our first target reached, as well as the reversal bar. We just made $100. We have absolutely nothing to lose. And our second contract is just below Fibonacci resistance at $200. So Ollie, it looks like your charts are coming through, but they don't look right yet. If you right click on your chart and reload historical data, it should straighten those trigger lines out. But you're missing fibs and one-to-ones, and you're missing a lot of stuff on those charts. So guys, what's happened in the trade? We've bounced exactly where the rules say it's most likely to bounce. We're above the small triggers now. That makes me feel good. I still have all the momentum in the world that I could ever hope for. And guys, the box around the one bar that got us in, we have seen a retracement, we have seen a bounce, we have seen profits, and now we're looking at continuation up. And if we're going to be fortunate enough, we're going to hope it gets up to 65.86, hits our second target, produces a $300 winner. If divergence prints from here, that's two divergences, guys. You can take an exit and look for re-entry. That would move your stop to 65.71, guaranteeing a $150 trade, or you can leave it break even. We're going to leave it break even and just follow the KISS plan, guys. We're going to see if all that momentum can push through that silly little pink line and get us to 65.86. Ollie, does that make sense why we let the large chart momentum lead the way? They missed us by a tick, didn't they? That's why I don't get caught up on these little things here. I need that little loss of momentum to get me to my perfect entry. And so far, it's been pretty effortless in this trade. Large chart always leads the way. When you reloaded indicators, try this, Ollie. Right-click and go to Templates. And on your big chart, reload the 13.2 Renko bar chart and see if that gets you where you need to be. You guys that get nervous, look at this. Smalls up, large up, clear path, synthetic up, mid-band up, small triggers up, large triggers up. Everything on every chart says up. My indicators say I'm more likely to go up than down. That's it. Why would I change my trajectory? Whoops. One tick away, maybe you don't want to give it all back. You could say, okay, if I get a reversal bar below the triggers, I'll exit the trade. It missed me by a tick, by one tick. I don't want to give it all back. Some of you guys will do that. But this is a reason. If it doesn't close on the other side of these triggers, guys, it's going to go up, and it's going to continue up until it closes on the other side of these triggers. And I don't know how far. And we could test it. We could put our target way up there, and on the second contract, force it to close below the small triggers. Do you guys want to do that? See if we get a runner? You guys that are trying to figure out whether or not to hold, whether or not to give it a chance. Estefania, have a great afternoon. Thank you for being here. Victor, that's what you would do? Paul, you have a completely different workspace, so it's difficult. You're on 7, not 8. Guys, they missed us by a tick. I'm not giving it all back. My worst case scenario on this trade is $180. But everybody's different, right? Everybody's different. My plan says this is my exit. My plan as a brand new user says get paid at 200. Management plans change as you change. Some of you will hold that one, and some of you will even say, my goodness, it's still a high probability trend trade. I'm adding back on if it comes down. I'm not getting stopped out on the way down. The KISS plan says I need to be break even. What I'm showing you is that there are 1,000 ways to trade the market, guys. There are 1,000 ways. And if they're rooted in advantages, you're going to use it. If you are going to hold for the bigger move because everything says up, hold for the bigger move, but don't put your stop where retracements may happen, right? If your rules say I will exit with a loss of momentum on the smaller chart, the reversal bar makes sense. If you're following the KISS plan and learning how to trust a market, your stop is at break even and your hands are in the air and you're not doing anything. And you're saying, because of this look on the large chart, I'm more likely to go up than down. And I'm just going to sit here and learn how to trust a large chart. There you go. That's still weird looking though. Something is wrong with your triggers. And we're missing the 5-1 triggers over here, the synthetics. Did you get with Jason, Ollie? I've never seen that weird double look on the large chart like that. And you're missing your synthetic. So on your small chart, you want to load the 5-1 dynamic Renko, and that'll put those synthetic triggers on there for you. That's a weird look. What did Jason say? Did he get you set back up? He got you your indicators back. Victor, you're waiting for an entry on a buy after a pullback. Victor, why weren't you in on the easy one? Huh. He will get you fixed. So guys, if you miss this one, you were talking to the gutter guys. Darn those gutter guys. If you miss this one, guys, this was the easy trade. This was the perfect trade. This was the everything is great trade, right? If it pulls back now, Victor, you've been 2 ticks from Fibonacci resistance. It's a different look. It still rules met, but the first one is always the easy one. Miss Jen, coward. Just kidding. Better entry. 2 ticks above. Get paid. Get paid. Not a problem. 4 triggers through. Beautiful, Jen. Did you beat me on the entry? You got in at 66. I got in at 66. Did you cut your 1 tick below? All right. So now it's a battle of the sexes. Jen got paid, made $190 or $290. I'm holding out for 300. We'll see what happens here. But what I really want you guys to recognize is that it's the same pattern that we've talked about all day long. Do I have momentum? Was there a clear path? And if so, can I define an entry? And I feel like we did a pretty good job defining that entry. And guys, they're stuttering, right? And a lot of you are getting scared. What does your large chart say? Watch this. If you really trust momentum, does anything about that large chart suggest the market wants to go down instead of up? I'm inclined to trust my large chart. So I'm going to hold out because my plan says I have to wait for 200. Putting all my eggs in one basket. You know what's cool though, Jen, is even if it pulls back, it still has a mid-band inside of triggers to create a bounce. Who knows? Maybe it'll work out for me. Maybe it won't. I don't care. I already made $100. They can't take that from me. And with this look on the large chart, I'm just building trust. I'm building trust in the idea that it's not my small chart that tells me. And I appreciate the rooting for me. We're going to see what happens. This is just the KISS plan. This is the most basic approach. This is the, I don't want to mess with it too much. Ed says he's going to add on if he hits the mid-band. Why, Ed? Watch this. Has nothing to do with money. The large chart look is momentum and clear path. My small chart entry rules say buy a pullback at an area inside of triggers. As soon as trading is about the money, Ed, you start exiting this great long right there because you're scared of small triggers. As soon as trading is about the money, you jump because your stop was too tight and you didn't want to lose. Let it be about the pattern. Let it be about the plan. Make hay when the sun shines. Nothing's changed in this trade, guys. Absolutely nothing has changed in this trade since my time of entry. I still have momentum. I still have room to my targets. Nothing has deviated from the plan. The longer you have to think about a trade, the more likely you are to jump ship. Because you'll convince yourself that that pink line is the devil, and you'll convince yourself that that potential has got to fulfill. And you'll say, oh, I'll just get out. I'll just jump out. I'll just do it. And guys, it's okay. If you got out at $190 on your second contract, that's awesome. That's a $290 trade. Jen, you could never be upset about $290 in a trade, right? Ever. If you are, we got to talk. It either hits me or it doesn't, guys. I don't even have to watch it. Odds favorable, clear path. That fib was right at the bottom of the triggers. Holy shnikes, guys. There's another one. Does the software work? Yes. Have you learned how to work it yet? I don't know. If you're still learning how to work it, though, guys, guess what? There's someone here to help you through every step. Every step of the way. From momentum to path to entry. It's not about the money, guys. The money is a byproduct of the process. Jen, I win. Not that it's a competition, but I win. Brand new users, you're going to be terrified to sit in a trade that stands still. Hey, Ollie, it never reversed, did it? Isn't that amazing? For you guys that are holding, it never closed below triggers. It's like having a crystal ball. The hardest thing is trusting. How do I learn to trust? And Ollie, I used to say the same thing. I wish I could tell you how many trades I didn't take because of that divergence or because of those trigger lines coming down. I used to talk myself out of this winner 10 times a day. And I love that you said that. And I think it's important that you said that because you described exactly what's going through the mind of half the people in this room. That's where the trust comes in, guys. So how do I trust this trade? Historically, if I put a square, a circle around the tail with the rules meant, does everybody see that it was a pullback to an area inside of triggers? The language lines up. This is the highest probability trend trade you could ever take. Victor, your gutter guys owe you $300. One of the things that you'll notice, if I pull the trigger in the room, guys, it's not because I hope it wins. It's because I want to show you that it's so important to have a plan. It's so important to have a checklist to get you in. Andy, great trading today, man. Great trading today. And I love your annotations. It's so much easier to read. I had a 100% pragmatic approach to entry, and I had a 100% emotionless approach to management. And guys, $300 doesn't suck. That was the first time I got my rules met today, and I'm up $300 today. Pretty cool, right? I think it is. I think it's all sorts of cool. Strong triggers. They're above the area. Strong triggers down says don't do it, right? Indecision down says it's probably not the best look. Got to wait for a little agreement. Got to get to the good side of those strong triggers. S&P. I know a guy in the room that with this strong triggers and this look probably got long about right here. 25.25. Probably got out somewhere at the outer band around 27.75. Pablo, did you do it? That sure looks like your look, man. Not sure. You missed it? Sat here looking at it? Right on. It's okay. Guys, I notice what you guys do, and I see what you do, and I look at how you do it. Let's talk about stops real quick. Using TradingView, and we're just going to do it. I'm going to see if I can find like a trend trade entry real quick. All right, we're going to use this one right here. I think Andy took this trade. Good stop lesson here. Guys, if I am looking for a momentum trade from this zone, it means that I let price break above it, and when price pulled back to that zone with strong triggers, that's where I buy the market. Is everybody good with that? This is a momentum style look. You see it on NinjaTrader. You see it also on TradingView. Price breaks above the zone with strong triggers. It pulls back to the zone. Guys, what I'm saying when I enter this trade is that because of the momentum, I expect this zone to hold and continue up. Your stop, use the language where the market should not go. If this momentum trade is going to be a winner, the market shouldn't get more than a couple ticks below that zone. That's a low risk opportunity. Some of you will say, well, if it breaks below that zone, I'll put my stop here below another line. I'll put my stop down here below another line. And if this trade fails, instead of losing 50 bucks a contract, I'm watching you guys lose 300 to 400 a contract. So use the idea. What do I expect to hold? What am I counting on? At the trade that we just did live, I was counting on this mid-band inside of triggers to hold the market. My stop was below where the advantage was gone. On TradingView, my stop goes below. And it's kind of a cool little concept because you can reduce risk dramatically if you enter a trade based on a close above the small triggers. You can use that bar that closes above. Shouldn't get back below, right? Shouldn't get below that pivot low if it's really going to work out. If it pulls back to the mid band, I enter on the close above. I use my pivot low. There's ways to reduce risk dramatically and using that language where the market shouldn't go. Paul, one trade plus 200 to win in daily goals. Time to set up a new computer. Getting ready to go real money this year. I love it. Steady at the helm. We'll see you tomorrow, Paul. Thanks for being here. Hey, great chart reads and great patience today. I hope you heard that before you stepped out. Now the NASDAQ is on the weak side of my triggers, which makes it difficult, but it's still strong triggers up. If I take a long trade, guys, I better not be fighting a small chart. I better not be fighting a 1 minute, right? Let these small triggers roll. Let's get back in sync with what the big chart says. That's where the advantages come in. Weak triggers at a fib. I'll be damned. Look at that. Rinse and repeat. I love this stuff, guys. I don't know about you. I get giddy. When I see Fibonacci hold, I get excited. When I see momentum and a clear path win, it just reinforces the idea that I can do this. I've just got to learn the patterns. We know it works. ES Trading View? Yeah, we just did, Jen. Let's look at it. Just to see it. Here's the S&P. So, Jen, we're going to do the whole chart read together, okay? No, you're good. The first thing I look at, the market's clearly going up, right, Jen? So I'm going to turn my attention to these small triggers. They're also going up. That's a good sign. So I'm going to go through how I think. So first, what direction is the market? Overall, it's up. Yeah, let's do that here. Let's just do this, Jen, for you and your crap eyes. Boop, boop, boop. Okay, this is the S&P. So let me make this. Can you see that? Is that good? Okay, awesome. So first, the market is going up, right? Everything's green. Triggers are up, large are up, everything's up. My second question, Jen, is what are my small triggers doing? My small triggers are going up as well. Do you see it? So what direction am I thinking, Jen? What direction is going to be the path of least resistance if I'm looking for a trade? Up. My second question, or my next question, is, let's get an arrow. What side of these triggers am I on? Do you see how I'm left of the triggers? And when I say I'm left of the triggers, my price bars are on the strong side of those triggers. So Jen, not only is the trend up, not only are the small triggers up, but dagnabbit, I'm on the strong side of those small triggers. I keep stacking advantages to go long. And Jen, there's not a darn thing in my way. Your large chart is perfect to look for a long entry. Well, here's one where it broke above support and pulled right back to that blue line of support. I'm testing a different indicator here. So Jim, this says up from the strong side of the triggers, but my small chart says down. Do you see how these fast triggers are coming down? I don't have anything solid to trade from, but right here, the market hits support and closes above those small triggers. Jen, that's your entry to go with the advantages on this chart. So if we take it a step further, if this is the bar that gets me in, close on the good side, trading with all the good stuff here, Jen, does it make sense that I'll put my stop below that bar, below that zone? If it gets below here, I just don't want it anymore. And what does it do? It dances a little, right? And eventually that market goes up. And that's a pretty easy trade based on large chart advantages. Does that make sense? So there's an order of operations in the thought. And I'll type it down and I'll give you this picture. First, it's what direction is the market going? And this is all on the 15. The 15 sets it up. What direction are the small triggers? Am I on the strong side? Yes. Let's find an entry, right? In your entry, Jen, if you don't have strong triggers, is a pullback to an area, get in on the good side. If you do have strong triggers, it might be break an area and pull back to that area, momentum trade. It could be when you do have strong triggers everywhere and I pull back to this HVA line, Jen, I'm going to buy the hell out of that HVA line. So it's letting it start here. Same thing as NinjaTrader. And then because this says look for a trade, go find an entry. Because that said look for a trade, go find an entry. It's the same thing on either platform. It's just a little different look. Is the white line on the 15 a problem area? Right here? This white line, Jen, is one of these indicators from the market dynamics. It puts in a trend line. So what that white line is, let's see if I can make this bigger. That white line is just a trend line. I like to be aware of it because this was your high or low, and that's when it started up, so it draws that trend line. On the large chart, you'll see it. On the small chart, I thought that I had it. We've already broken it, I think, so now it's a lower trend line. I pay attention to it. It's not written into the plan, and I am outside of the outer bands, so I am only looking for long trades. As long as I'm outside of these outer bands, I don't want to go short, which supports the idea that with strong triggers everywhere and outside, I'm just going to keep going long. Because it's going to take getting back inside of the outer band to put me on the wrong side of these small triggers. It's going to take a pretty deep retracement to get them to roll. Does that make sense, Jen? And the cool thing is when this is screaming up, if I get way outside of my outer band here, this outer band sometimes behaves as support. Now I just need to pull back to the HVA, something to give me a bounce, right? Maybe there's a chili dog trade. With everything up and nothing in the way, I don't know. I haven't created a chili dog yet. But we could just see if it slows down just for grins, right? So where would my stop be? I don't know. If it closes below the triggers, I don't know how much you would leave on a trade like this. I've never taken one. Everything says up. Let's see if it continues up. But if you miss your entries, guys, sometimes it's better just to let that pullback happen because the market works in fluctuations, right? The market goes up and down, up and down, up and down. And when this says everything's going up, a little bit of down here gives me a pivot to manage behind. Does that make sense, Jen? Everything says up. Let's go up with it, right? There's one of those HVAs. Snaps back, hits it, giddy up. You understood it all. I love it. You're welcome. Guys, this is what we do in the class. All you have to do is ask. I just don't always know what you guys want to talk about. I quit reading minds a long time ago. Joel, odds favorable, clear path, perfect entry. Did you get stopped out? Did you get stopped out and have to re-enter, Joel? Trust issue there, right? Joel, perfect entry. Oh, crash, right on. And then you get back in, make your 100, and you get out with the second divergence. Beautiful trade. Do you see that big red fib over here, Joel? Should have been over here. I'm not sure why it wasn't. Either one. Great trade, dude. Great trade. Ron, have a good one. I'll go check that message here in a minute. Sorry I missed it. Enjoy your day, man. Great trade, Joel. Great trade. Hate a ninja crash. So check it out. Everything says up. Jim, do you see how we're inside of the small triggers now? This is a transition period. I think I have a picture for this. I'd be surprised if I didn't. Here we go. Strong side. Transition. You can still take longs. Make sure that your 1 minute's good. Manage them a little more. Weak side. Don't fight the 1 minute. And Jen, there it is right there. When you get outside of that outer band, no shorts until I'm back in. So I'm in the transition side of the triggers. I'm directly into an area. Now, Jen, if I get a pullback to the zone, to the one-to-ones, to the HVA, to the mid-band, and I get a close on the correct side of my triggers, I might look for a long trade from down here just to go with the trend, to go with the momentum. But my plan says don't trade into one of these areas. They can create a bounce. Nope, they're different. They are different. And Jen, because they're minute charts, it's not like a 5-1. It's not like a 5-1. It's a 1 minute. It's a lot more impactful. Steven, when you say can you use your futures funded with TV, which futures funded? Who's your broker? I mean, they've got a brokerage. So Ninja Trader is your brokerage? You should be able to trade Ninja Trader on TradingView. Now, Steven, are you asking about being able to trade the Nexgen futures funding company with your Ninja Trader on TV? I want to make sure that I answer it. Nope. So yeah, they've got a spot for Ninja Trader. I've never tried to log in to see if I could, but I imagine that you could. Just talk to your Ninja Trader broker and make sure that everything's good for that. But it looks like it's supported. That is definitely a broker question, though. Please don't take my word for it. I am not a broker. You want to get away from NT8 completely? Too many crashes, right? That's why John Novak built the funding company around TradingView. And the cool thing is, Steven, if you haven't already done it, you're going to get all the next-gen indicators for TradingView for free. You've already bought. John's going to give you all those for free. And man, I love teaching it. I love teaching TradingView. I like TradingView. I hate a market that crashes. All right, Boaz. Strong top, momentum, potential to break, weak triggers and divergence, my friend. The biggest killer of 50-50 trades. It's a great entry. Could have used the reversal bar to have a lot less risk. But this right here, Boaz, that's the thorn in the side on this particular trade. Divergence kills a 50-50 trade more often than it doesn't. TV isn't next gen, Steven. TV is its own thing. TV is a platform the same way Ninja Trader is a platform. They have about 100 million users. It's not next gen. So yeah, you would just have to have a broker. You could trade through any of these guys. AMP, John's had like a 20-plus year relationship with AMP. That's who we're using for the funding company. Right now, I'm in an Apex evaluation, so I'm using Tradovate. I'm using the Tradovate data to go through to execute on that prop firm. So yeah, there's people all over the world trading TradingView with their own money. Can you trade next-gen indicators with TradingView in your own money? Absolutely. Absolutely. Boaz, everything says up, nothing in the way. Pull back to the area inside of triggers. Got in a little bit earlier. Great stop placement. Awesome. Nice trade, Boaz. Momentum and path, guys. Momentum and path. Strong triggers. 4 triggers above resistance. Pull back to support right at the bottom of the triggers. About the lowest risk trade you could ever take. Easy money. Easy money. Nicely done, Boaz. Nice recovery. Do you have TradingView yet, Stephen? No? Watch this. What brokers can I use on TradingView? And there's your list. I don't have an opinion on brokers, Stephen. One thing that I like I like names that I recognize, right? I like names that I know have been around. NinjaTrader's been around forever. They're in the middle of being bought. I'm not sure how that's going to affect anything. AMP Futures, John's known the owner of AMP Futures for 25 years. That's one of the reasons that we're using them for the funding company. But you can go through and just check these out, whatever you want to do. And then once you and your broker, like once you have the login on the broker, I don't know, we can try real quick. Let me log out. Let me click NinjaTrader. I don't remember my NinjaTrader login. Here, let me do it off to the side in case it's wrong, so you guys can't see it. No, I don't remember it. Dang it. It defaults. One of the problems of the defaults. But again, get with your broker, Stephen. Please get with your broker. Don't ever take anything I say on anything other than chart reading as the gospel truth. Please. Didn't do it. Stop would have been in the middle of nowhere. Triggers. Rolling. I like this. Edwin, you're saying, Edwin, I've never called you Edwin. Ed, everything's breaking above resistance. Everything is up. Could have bought the pullback. That's that Nexgen momentum trade. And virtually no risk. That's a great trade. And then if this trade fails, well, mine looks different. That's crude oil. Hold on. Yours was S&P. If that trade fails, and the rules are met, then it turns into a trend trade. New cutters look awesome. I love it. Can I please show the screen again? The different companies icon. This one. AA par. Cool. Here, watch this. There you go. I'll just give you the picture. I mean, the Googles have all the answers, right? So stocks, futures, options for futures, for Forex, for crypto, other notable brokers, to connect your broker to TradingView. So Stephen F., if you already have a NinjaTrader account, right, go see if you can connect your account. The worst thing that happens is you're not going to be able to connect your account. All right, Pablo. Above the outer band, momentum, strong. You get in above trouble, you get out at trouble. Well, I can't find a darn thing wrong with that. Green ball stack gave the confidence that there was still more climbing. Smalls up, large up, above the triggers, or above the area, and taking it to the area. And it's all based on large chart advantages. Nicely done, Pablo. Quick little hit, right? $100 at a time pays bills. $100 adds up, guys. $100 adds up. Do that 10 times a day. You'll never work a day in your life. Guys, we are officially in a strong trending market, 30 plus bars in the same direction. There are some people that will tell you in a strong trending market that they will just keep buying a mid-band until it doesn't work or until they hit a termination condition. You'll have to make your own decision on that one. And guys, I think that's about it for me today.